The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and it's my pleasure to take your calls at 877-927-6648. Dow's down 107, not a big deal, but it is a big deal because it took out that halfway marker of the Chapman Wave Roman candle that I've been talking about, and historically, it doesn't have to happen every time, but most of the time, coming off the top, it doesn't matter what time frame it was, a daily, a weekly, or a monthly chart. We saw what happened in the monthly chart back in, October of 2000. And right here, let me just get to it. I mentioned it. I may as well show it right here. Oh, it was February of 2018. Right here. Chapman Wave Roman candle. And where was it? Right there. Chapman Wave Roman candle. Just after the January high of 26,616, and went halfway into the market. This one took a long time before it actually broke down. It actually took a whole 2 months, and the second month it went and tested the 23,344. It went fractionally lower, 23,360, then went fractionally lower. Then started that beautiful move to the all-time high of 26,951. Now, got something maybe a little similar here, I'm not sure. But this is a daily chart, and you can see we drew the schematic right here. This is the plot plan that we thought would unfold. And the rule of thumb with this Roman candle is if you get into the halfway marker in a shorter time frame, I said about 60 to 90 minutes in the 120-minute chart, there's a really good chance you're going to go close to, right at, or just under the 25,611 low of Tuesday. Today's low is so far at 25,646. And if you look at this chart here with the automated that I show my subscribers every day in great detail, 25,665 was the automated support level. We're a little bit above that now. We're at 25,714, having just gone under it. But the 120-minute chart right here, this is the chart that I was looking at as the arch formation, Chapman Wave, lowercase h. Here it has automated support at 25,684. And as I say, the low today was at 646. So, and the day's young. Anything can happen. Simultaneously, I've just got a reading my Chapman Wave Trin gauge. These are all proprietary techniques that I've developed over the years that says there should be within 2 days a very strong 9 to 11 point rally and then continue the trend that you were in. So conflicting technical tools, but time sequences is the difference here, that everything can unfold, but in different time sequences. We've gone to the 200 period, the 20 period, the red, thick 220 period moving average. On Tuesday, we hit it and then bounced up. Today we hit it and we're trying to bounce up. I like what I see so far in the sense that this is a very orderly pullback after a spectacular move. Even the last move, just the move from the 10th, was it around about the 10th or the 8th of February, from the 24,883 level, spiraling right up with barely a day of rest at each peak, and it goes to 26,241 on the 25th of February. So this is all well intentioned, nicely done. I'm going to put in the pattern that I've been looking at here, and that is the arch formation. Doesn't mean to say that you have to go all the way back to the bottom where you started. That was that 8th of February low, but it does say we've now tested for the second time the 20-period moving average, which was not even close to being hit for weeks. We're underneath the 14, the black line, the 14-period moving average, and we're now for 2 days in a row, we've been trading under the 9-period exponential moving average. What that says is it's going to take a period of time. And what I said to my subscribers is let's use this weekly chart that I used with these 5 moving averages for months and months. We've been looking at that and saying, look at that spectacular move to the upside. The price is constantly holding above all the moving averages. That's the 7 SMA, the 7 EMA, the 9 EMA, the 14 EMA, and the 20 EMA. And lo and behold, when it came down from the 26th of January of last year. There's a weekly chart. Kaplop, it went straight down to the 23,360 level, had an arch formation, and then came back down, and it broke it by a fraction, which is 23,344. Then started that big move in a big rectangle and a double cup formation to the upside, 26,951. All the moving averages, the price went right above them, all 5 of them. And then it came down and went below all 5 of them. Now you've gone above. So this is going to be very interesting because it's saying that there should be a move towards the 25,500 area, and then we'll see. That's all. We can just go one step at a time. Okay, enough with that. Now let's get to the nitty-gritties. Did I want you to get to the nitty-gritties? Yes, nitty-gritties. What I said is we'll look at the TLT because during the TFNN noon update, I do all the indices. So now let's go to the TLT. 120.35 up 51. Made a low of 118.56, 118.64. Let me type that in. 118.64. That was just 4 sessions ago. Now it's at 120.54. Now, my contention for a long time was that if the stock market became jittery and started to make lower lows and lower highs, then what we could expect is that under the normal conditions, money would come out of the fragility of stocks and go into the so-called security of bonds. But I'd been looking at the 10-year TNX, and I said, wow, that breakout to the upside is quite impressive. If, in fact, there's a move above the high that was made earlier on in January, that was the second week, that was the third week, the 18th of January, 27.99 was the 10-year price. If it can break above that, then something else is happening. Then the Fed is going to get its inflationary yield, and maybe even commodities and other stuff start to move higher. Well, it turns out there's a big move down from the 27.50s to the 26.92 area right now. And we'll have to see, because so far money is coming out of the stocks and probably is going into bonds in the traditional sense of the word. So we're going to be watching that. And I'll just give you TLT parameters. TLT right now, if it, at 120.53, if it trades for 2 out of 3 sessions above 121.55, there's a real good chance the market will go down quite a lot lower. And that'll be the traditional money going from one place to the other. And the other thing is that the IWM, even though the dollar went higher, and crude oil actually went high before it started to pull back here, the IWM Russell 2000 is kind of ignoring it. It's been acting very poorly. It was a bit of a leader on the way up, and now it's kind of a leader on the way down, trading at 154.48. A couple of questions I have, but let me just deal with this one at a time. I'm going to go to gold again, just to show you that gold is up 2.8. Should be up a lot more, but it's giving a little bounce here. Peak E in the weekly chart, that says more time, less price on the upside. It just needs time. I'll be right back. Basil Chapman, Dow's at 108. Be right back after these important messages.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back, and the PALL, that is Aberdeen Physical Palladium. Now, I'm not sure one uses this to trade or anything like that, but I use it because it's the best I've got. I don't seem to have palladium as a continuous contract. Made a peak E-top in the Chapman wave right there on the 26th of February at 149.01. Trading here at 144.49. It's had 6 days of consolidation, holding the 9-period exponential moving average, but the chart itself looks to me like it'll probably go down to the 140 to the 1, and it could even test the breakout with a low of 139.07. So it could go from the 136.71. Wow, that's a huge gap up. It's already filling in one gap. Yeah, the next gap would be, I think it's going to the 139s over about a week or so. Why? Because this doji candle at a peak G, as the on-balance volume weekly turned down, MACD is still strong, stochastics greater than 95, but it says to me, could be a consolidation. I'll even put in the pattern. I don't think this is an Eiffel Tower straight up, straight down pattern. I think this is more, that's what I'm looking at. Some kind of a consolidation, limited upside and more downside, but even then, just relegated to the 139 initially. So we're at 144 right now, had a low of 142. In the 142s, I think 142.24, and nice little bounce. I think it could make a little bit more of a rally. Then I think it makes lower lows. That's what I'm looking at right now. Nothing negative in the sense that it's had such a big move. You'd expect that some kind of a consolidation is taking place. But remember, we were looking at charts in the Investors Business Daily Top 50, and I said, you know, I went through so many over the past 2 weeks, and so many were making DEs and even Fs in their daily charts. Everything there looked like they were pretty overbought, and that there should be a pretty decent pullback. That's kind of what I'm looking at now. What was it, beat we were looking at? This is Biotelemetry recently made a peak F at 80, had a spectacular move, and now it's at 66. I'm trying to think. Team was another one. I should have had them down. Team makes a peak E 3 days ago with Chapman wave, 2-bar reversal, and now it's gone from the 111.76 top on the first. It's at 103. not a big deal, but it is saying there's a big consolidation coming here of time, maybe not so much price, but at least time. So when the more I went through these charts, the more indexes I went through, everything about it said, just be real careful over here. Maybe your stock will hold up, but it might have limited upside. Just in terms of the E-mini right now, trading at 2776. Just be careful, because if it takes that 2772 low, that's going to be a pretty quick decline down to the low of Tuesday. And if you look at this particular chart right here, which is the ESH19 in the different time frames, you'll see Chapman wave Roman candle 28.1975 was the high. Leg B hasn't made a peak yet, has to have a lower high all the way into next week, which I think will happen. But right here, you'll see in the 120-minute chart, look what happened. Makes a peak D at 28.19.75, plunges down to 27.67.50 on the 200-period moving average, 120-minute chart, rallies to a peak B, makes an arch formation, makes a second arch formation, fails, and now it's testing yet again. 27.72 is the key support. It only has 5 or 6 points to go to test the 27.67 low of Tuesday. I suspect that is in the cards. Just be a little careful here. A couple of things we want to look at here. Oops, I wanted to get out of that. The IYT was a heads up to say if the transport, I spent a little time on this about a week ago, saying if the transportation index, which is at a spectacular move, it's just made a double top, basically in the Chapman wave methodology in the weekly chart, is called the right here, Chapman wave 2-bar reversal. That's suggesting that there should be a consolidation, and the 200-period moving average was my target to fill in the gap from about the 11th or so of February, and it's done that. Was that February? Yep, February. And it's trading at 185. 192.27 was the high. 192.26 was the double top formation, rolling correction there. So you got to be very careful here, because if the transports for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 sessions, no, 12 sessions has not been able to break above the 192.27 level, but instead is making lower lows. It's just telling us that you've got to be careful here, because this is part of Dow theory, which makes sense. All right, next thing we want to look at here is, I was asked if I'd look, yeah, sure, I'll do that. I'll look at the SMHs. SMHs are down at 102.36. The low today is 102.21. It just broke the 102.22 low that I said was absolutely imperative to hold when we were speaking a couple of days with Ben from Tallahassee. I said, that's the number to look at. If it takes at 122.22, it started a leg B to the downside, and the pattern that I've been I illustrated is actually coming to pass. So we're going to be watching this very closely. The next level will be between 101.30 and 99.80. That's what I'd be looking at in the SMHs. One thing that I wanted to mention was, remember we looked at UTX yesterday. I said UTX is just kind of chopping along at the bottom. Nothing too exciting, but if UTX actually pulls back from the high of 129.64 on the 20th of Feb, trading now at 125.77, not a big deal, 5 points, 4 points. If it does break under 124.50, that says 123.87 is going to be the key 200-period moving average support. I am expecting lower prices, and that's why we are short positions here. And at this particular stage, raising some cash, getting ready for some great buys coming up next few weeks. I don't think you have to rush. Just take your time. There's going to be plenty of time to get into these positions. You don't have to go short. You can just say, you know what, raising a little cash, I'm going to get into positions that I missed before. At least I'm getting into them much lower than they were at the most recent highs. GE in the den, Paula says GE down 7%. Yeah, GE, made that peak D in the weekly chart. I think it had its big honeymoon phase, and now comes the reality. And that reality says, looking out, I think GE is going to be a turnaround stock, and it might have started that whole process with that doji candle low at 6.66 back in, what date was that? That was in December. December runs all the way to 11.29 on the 25th, and now it's at 9.18. Big percentage decline after a big percentage move up. Still needs to consolidate more. I think we'll be looking at this more in the 850 to 820 area. That's kind of where I'd be looking at it as far as potentially adding to a position or buying a new position. Let's just see how it pans out there. A question I had about, XRT. Good, thanks for reminding me about the XRT. XRT is trading at 45.42, down 23 cents. Made a peak in the Chapman wave back on 46.93 on the 1st. And now 46.93, and now it's trading at 45.42. Not a big deal, but it could consolidate here. I'll be back. That's the retail index. Be back straight after these messages.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I remember back, 46.93 was the high of the XRT 4 days ago. It's starting to test the 14-period moving average. It's done that a lot, and then it's just bounced and held above it. But now the MACD for the first time has come down. Stochastic's way down 56%. On-balance volume is pulling back. So now you've got to be somewhat careful. This is the retail index. So we're going to be watching that. Why? Because this, how do I describe this? On a percentage basis, the rally off the low of December, around about the 38 area, to the recent high of 46 is a spectacular percentage gain. So you can expect that there could be a pullback. The difference between a pullback and making an arch formation with a much deeper decline underneath the 43.99 200-period exponential moving average, that's going to be the big deal. That's going to tell us a lot about what's going to go on for a good part of the next 3 months. So I'm watching the XRT really closely. What happened there? How did I hit that? Okay. Oh, XAL. Yeah, that's XAL. You know, the IYT, we got two separate things going on here. The XAL is the ARCA airline index plummeting from the 106s to 99 right now. 1, 2, 3, 4, 5, 6, 7, 7 red candles. Makes a high and then it has 7 red candles. This is a big deal. I mean, if you look at CSX, which is the rails, this is CSX Corporation, up near the all-time high, 76.74. It's trading right now at 72, big deal, 4 points off the highs. Didn't make the all-time highs on 3 big attempts to the upside. So we're going to have to watch that. So far, it's weak action down 47 cents today at 71.99. But really, the weekly chart, that is much better than the XRT. Look, it rallied really strong. It rallied almost, I would say, about 4/5 to the upside. That's a big deal. So we'll be watching that. Now, let's look at something else. I wanted to, within the context of the different sectors, what I wanted to look at was the volatility index as an overall gauge. Look, the volatility index was down just about an hour ago. It wasn't believing any of this. It was in the 14.90s. Now it's at 15.70. The low today was 14.74. So this is up a dollar. And that's a big deal, because you remember I spoke about this earlier in the week on Monday. I said, let's see how the VIX index closes on Friday, because it's had so many down weeks that it matches a number of other times where it has had about this number of down weeks under the 9-period moving average, and then under the 14-period moving average, and then testing for 3 weeks underneath the 200-period moving average. So it was kind of ready for a bounce, and this bounce was alluded to on Tuesday when the VIX index went from the 1340s to the 16.98 level. Let me just type that in, 16.98. I mean, that's a huge intraday move. And then it closes toward the lows in the 1450 area. So now it's at 1569. This Friday, we're 2.5 days into the week. We've got 2.5 days to go. If this Friday, the volatility index closes, number one, over the weekly 200-period moving average of 1524, that'll be one thing. If it closes over the 9-period moving average, that's the pink one, of 1625, that'll be a lot more serious. If it closes over 17.06, which is the 14-period moving average, the black line, let me make this bigger, it's the middle chart, the weekly chart. If it closes under, that was the high of the day, 15, what am I looking at here? Of the week. That 16.98 level was just under the 1707 level that's at right now. If it closes over 17 in the volatility index, I think we got more time and price to go to the downside. If this is it, and then tomorrow we get the Chapman wave two-day rule of a very high trend gauge reading, as we've got today, and then you get your 9 to 11 point bounce. Hey, that might change things, but we could even have that off the low today. What was the low? Let's go to the E-mini. The low today so far, 2772.00. So 9 would get you 9 to 11 would get you to 2779. No, sorry, 2781 to 2783s, and we're at 2775. We could even do this intraday. Yep, there it is, a nice little bounce, 2776, moving up nicely. Dow's down 108, S&P's down 13. Dow's a little bit stronger than the S&P. Interesting. So now what we're looking at is what happened. You got your leg D to the downside in the 10-minute chart, right? There it is. Now it's ready for a bit of a bounce. And that's the lunchtime, quiet lunchtime bounce. And I think that's what we're getting here. If at any point during the day, we're at 27.76 on the E-mini, we start to have this extraordinary rally, which happens every once in a while, happened a little bit yesterday, and intraday on Tuesday, and then a little bit yesterday. If we get a push over 27.84, no, sorry, 27.85. 27.85 in the E-mini, that'll be really good action. That's say, oh, chop, chop, chop. That's what we're in for, not just a severe decline, just rather chop, slightly lower high, slightly lower low, slightly, just gets, that's the mantra. But if there's a reversal today and we take out the low, the trough D low of 2772, and actually trade for 25 minutes under 2772, I think we go straight down and test the 2768 level of Tuesday. And that's my thinking, is that we still have to do that. All right, here we go. Questions that I got here. There was a question earlier on. If I would look at, where was it? Yes, NTAP. NTAP, I discussed that the other day. Now it's having a deeper decline. It's down 97 cents to 63.91, making that arch formation. And it had kind of a little bit of a bounce yesterday. We looked at it, and my initial reaction was yes. At that point was to short it at the opening on Monday. Was that Monday or Tuesday? Today's Wednesday. Oh, that was Monday. So Monday was the candle. Sorry, Monday was the candle that we tested the lows. So that worked out well. Then I said yesterday it would be a little risk-reward wise. It was a little tougher, but it is pulling back. And that's just saying to me that the stocks that had the least rally, even though it was a good percentage point off their lows after the major tops, like NetApp, Inc., NTAP trading at 63.73 right now. I didn't mention this before. I almost put it into my newsletter this morning. Amgen. I don't believe it. Amgen was my pick. And I just erased it this morning, but I can't complain. It's down 2.94, but we actually have a position that is up quite nicely. I don't know if it's up as much as that, but it is up. Oh, I was going to be buying options because it made a peak. Let me show you why I thought Amgen was the perfect short. Look how long it took to make this lowercase h that goes to a lowercase m, and was right there yesterday. And I thought, oh, this looks very much like it wants to test this uptrend line. Never did it. That is a shame. All right, well, there are plenty of other stocks that are going to do something like this. Amgen trading at 183 down 5.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, everyone, we're back. So when I was looking at an Amgen, I actually started off with the IBB, and then I thought, well, you know, we are short ETFs, the 3-time short ETFs. I don't have to get too carried away here, but let's look at individual stocks and let's see if we can put an option trade on. Then I look at this huge arch formation, lowercase h formation. I look at the pattern in the weekly chart that just says chop, 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 upside, downside, just alternating. And then it had this rally from the low that was made in December. It rallied just from the 170, I didn't put that in, 179 level to the 200 period moving average, pulled back, and it keeps bumping into the 200 period moving average. And that said to me that the MACD was much weaker now and it should pull back. Stochastic was also weaker and it should pull back, having turned around under 80%. So this is a spectacular move to the downside from just being kind of quiet. Boom, big red candle. Anyway, we don't have it. I'm just talking about something that I actually had right up until minutes before I sent my newsletter out, and then I said, no, we're going to do something else. I'm just a little afraid of individual stocks, especially in the pharma and biopharma area, because of lately we've had a couple of takeovers, and all you need here is you've got a perfect entry, and out of the blue there's a takeover, the thing pops 20 points. I said, let's just stick with ETFs of the indices right now. Probably now that we've had some success, I'll feel a little more comfortable putting some money up for the individual stocks. We'll see. I think there's time here. I don't think this is going to be just a short-lived little pullback. I think we've got at least another week or so to go. That's my thinking. We'll see by the end of the day. Couple of things we want to look at here. I was asked about copper. Yeah, copper is holding quite nicely. It's made that peak E at 2.9805 on the 25th of Feb, and it's pulled back to the 14-period moving average. Now it's just under the 9-period, trying to retest the 14 at 2.91. I'm going to be watching this closely. It looks like it's a little tight based on the weekly spiral to the upside to the 200-period moving average at peak B. That's copper. What was the other question I had here? XLF. XLF is the financials, and they are pulling back. Peak E in the daily chart. Let me just squeeze this so you can see it better. There it is, peak E. I'm still just a plus sign, a red plus sign. Why? Because the MACD has turned down. Stochastic has now turned down a little sharper than it had. It's at 67, but I needed to see it close below certain moving averages before I could put the down arrow. Still might have to wait a day before I can put a down arrow. It looks like it'll be there, but hugging the 200-period moving average says that at 2634, 2605 to 2593 is probably an area that I have to watch as key support. Next question I had was, what about the Let's go through the Euro, EUR, USD. Euro is not doing very much. It's actually looking very poor once again. USD JPY is the yen, and the yen disappeared. Oh, there it is. The yen is acting quite nicely. Made a peak D, second peak D. It was an instant restart. No, failed an instant restart. But this particular D with MACD strong and the stochastic at 86% says if it can hold here, that'll be good action. That'll be commensurate with what's going on in the dollar. But if it's suddenly at 111.75, if it suddenly starts to trade at 111.42 and then lower from the 9-period moving average to the 14 at 111.17, that means it's due for a rest. And so far, it just hasn't shown that weakness yet. So what is this? Quote systems seem to be back to normal. Was there a problem? I didn't notice a problem. Maybe there is. Okay, so I've got all those questions out the way. I just need to review one thing here. WBL Walgreen Boots or something. W is now part of the down. Oh my, down 241 at 60.99. I did not finish. I actually had this before. Look. Using the Chapman wave methodology on the weekly, you go from the 59 area and you count each successively higher peak. Peak A, next one is peak B, peak D, peak E, and it goes to peak F. And peak A, B, C, that wasn't a peak. No, D, E. So it goes to peak E and then it gives a sharp sell signal to sell mode. And now it's made the H pattern, the dreaded H. It's completely failed by the 64 support. It's trading at 60.99. This is not good for that sector. Let's see what CVS is doing. CVS is trading down at 68 at 54.20. It looks the same. Looks even worse, actually. Oh, my. 54.29. A lot of the $54 stocks are doing badly. Walgreens. What was the other one? CVS. Walgreens, I'm forgetting it. Yeah, that's fine. I want you to look at ExxonMobil. ExxonMobil trading down $1.39, made a peak G top in Chapman wave. 2 doji candles, a little silent doji of yesterday. Big gap down. It's at 78.81. If he made a high just 3 days ago, of 80.55. No big deal yet, but 80.55, this is your energy sector. So if it starts to pull back under 77 in the next day or two, that's not good. Let's just go back to our E-mini right here. Remember, I drew the arch formation, got the arch formation. It's about to take out the left side low. I have to tell you, this technique that I developed a long time ago, I just have absolute respect for it. It's not that it can't fail. It's just the number of times that it's worked the way it's supposed to work, this Chapman wave Roman candle. I don't know if it's going to do that today, but it says once you trade into halfway of the wick, the lower wick, for a certain amount of time in a shorter time period, so it's a daily chart, I'd say 60 to 90 minutes below 25.710. Let me just double check. Yep, 25.710. There's a real good chance we're going to go quickly down to the low of Tuesday. No, today's Wednesday. Of Monday. I keep saying Tuesday. It was Monday. Monday's low of 25.611. Let's see if that unfolds. All right. So we've gone through a lot of stuff today. What I did want to do, just as we were about to, before we go to the final segment, I want to just show you, look, Amazon had a nice rally early on, goes to peak C 3 days ago. Now it's back down to 1673 after being in the 1712 area. This is saying, look at that weekly chart. This is not good for these guys. Goog is, this is not the Google alphabet, holding very nicely at 1159. Getting a little tight, but not pulling back at all. Under 1148. Under 1148, I think it'll pull back deeper. Apple is trading at 174.77, down 76, made a peak E. with a long-legged doji. Normally, I didn't have time to do this. Normally, I'd grab that candle and I'd draw a rectangle and say, all right, a break below the low of that candle within 2 sessions, and a close below it would say that the 173 area should be tested very quickly, and it's at 174.82. I'll be back. Basil Chapman, Tiger Conditions Hour. Dow's down 127. Still not too bad, I must say. I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or PRIMAL for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Hope Steve's feeling a lot better today. He wasn't well, suddenly lost yesterday just before his show. So I had a question here. Greg. Greg wants to know, Basil, if you have time, can you look at the TVIX 30-minute doing you from 3419 at 2693 to 3209 peak. So I haven't quite been, was this covered on your CD? Yes, I'm pretty sure it was. I just haven't had time to read your question quickly, but I did have time to do it. So the TVIX, which is the 2 times long, the VIX index makes a low 2697 at 10:30 on the 4th. It runs all the way to a peak B. That becomes a peak B minus because it fell to 3209, pulls back. Then you had a series of A minuses failures, but the low that was made at trough D, right at 2901, starts an A, then it goes to a B as C, and within seconds we should go above 3148, and that'll start leg D. So, and also you've got a left side, right side price time match. I haven't drawn it in as nicely as I should. I'll draw it in right now, and that says buy. Right there. It says by 1:30, this is a 30-minute chart, by 1:30, it should be testing 3209. So I hope that answers your question. Make a picture of this. I'll discuss it again tomorrow if I have a chance. This is the TVIX in the Chapman wave notation. Look at the way the MACD is strong. Look at the way the stochastics at 80%. That's good. On balance, volumes are rallying. It has just, as we're about to go to our final minute, 31.48 is trading at 31.50. It's gone to a leg D around the corner and it takes on the green candle, starts to overtake the red candle, and we've got ourselves a D trading right there, going towards the towards the Chapman wave inside wedge target line. So I hope that helps you, Greg. But I'll do a little more. Maybe I'll discuss it a little bit more. Usually it's Technical Friday we do it, but that was it just before the bell. Dow's down 157. Please be careful. Watch out for a test of the low that was made on Monday in the Dow, and then the others should start to follow. This is a period where there's uncertainty. There isn't overall bad news, but there isn't any good news, and that's a problem for the market. Watch that VIX index is at 15.92, and the trend gauge gave me a reading that says there could be a bounce of 9 to 11 points at any point in the next 2 days after today's close. I'll have a great day. Stay tuned for the other programming. I'll see you tomorrow. Check out my opening call.